If you've been following the stock market at all, you've heard the name Palantir. It's got to be one of the hottest, and honestly, one of the most polarizing AI stocks out there right now. Everyone has an opinion. So in this explainer, we're going to cut through the noise, look at both sides, and figure out what is really going on with this company.
Okay, let's just start with the number that gets everyone's attention. Year to date, Palantir stock is up an incredible 376%. Nope, that is not a typo. We're not just talking about a hot stock. This thing has been an absolute rocket ship. So that's why we have to ask, what's fueling this fire, and can it possibly keep burning this bright?
So here's our game plan. First, we're going to look at why the hype is absolutely real, what's driving all this momentum. Then we'll dive into the two sides of the debate, the bulls, who see nothing but blue skies ahead, and the bears, who are screaming, warning. And finally, we'll pull it all together for your big takeaway.
All right, let's kick things off with that incredible momentum. I mean, a stock doesn't just jump over 300% for no reason. There has to be some seriously good news lighting the way. So what exactly has been happening with Palantir?
Well, just take a look at the kinds of wins Palantir has been racking up lately. We're talking about a massive, potentially $2 billion deal with the UK's Ministry of Defence. That's their first billion-dollar deal overseas. They've also teamed up with the aerospace giant Boeing. And get this, they passed a major cybersecurity audit with a perfect score. That's a huge stamp of approval for big, cautious institutions.
And here's where things get really interesting. For years, everybody thought of Palantir as just a government contractor, right? But these numbers, they tell a completely different story. Yeah, government revenue growth is still great, up 53%, but look at their U.S. commercial revenue. It has absolutely exploded, up 93%. This proves the company is making serious inroads into the private sector, and that is a massive, massive market.
So all this crazy growth leads us straight to the bull case. The investors who are still buying this stock, even after it's run up so much, they believe this is just the first chapter of a much, much bigger story. So what are they seeing that maybe others aren't?
Well, it really comes down to what the bulls call Palantir's secret sauce. See, it's one thing to build a cool AI model in a lab, but it's a whole other ballgame to actually get it working reliably, securely, and at a massive scale across a huge organization, like an army or a Fortune 500 company. Palantir is a master at that really difficult step, going from a prototype to full-blown production, and that solves a huge headache for their customers.
And that potential? It's attracted some really big names. Cathie Wood from ARK Invest, one of the most famous tech investors out there, literally said Palantir is the next Tesla. Now that is not a small statement. That's a belief that Palantir isn't just another software company. It's one of those generational companies that's going to completely disrupt an entire industry.
And it's not just one big-name investor saying this. You've got independent, third-party experts agreeing. Top analyst firms like IDC and Forrester, they've recognized Palantir as a market leader in its field. This kind of validation from the pros really backs up the bull argument that Palantir's technology is the real deal and gives them a serious edge.
Okay, but for every bull, there's a bear. And the case against Palantir is just as powerful. And to be honest, it's a little bit scary. So to really get the full picture, we absolutely have to understand the risks here. Right? The growth is amazing. The tech gets rave reviews, huge contracts are coming in. So you have to stop and ask yourself, what is the catch? Why isn't every single person on Earth buying this stock? Well, the bears have a very, very clear answer to that.
And that answer is this number right here, 134. Palantir is trading at 134 times its annual sales. Let me just say that again so it sinks in. Not 134 times its profit, 134 times its revenue. By pretty much any standard you can think of, that is an incredibly high price tag.
And just to put that number into perspective, to show you how wild it is, the next most expensive stock in the entire S&P 500, it trades at 41 times its sales. So Palantir isn't just a little expensive, it's in a completely different universe. I mean, the stock could lose 2/3 of its value tomorrow, and it would still be the priciest stock in the index. That right there is the heart of the bear argument.
And you know, history gives us a pretty stark warning about what can happen when stocks get this expensive. Just look at Snowflake, SentinelOne, or Zoom. They were all market darlings. They all hit these crazy high price-to-sales numbers, and then, well, they all came crashing back down, falling anywhere from 73 to 90%. History tells us that valuations this high are almost impossible to maintain.
And beyond that insane valuation, bears point to other risks too. Even with all that commercial growth, the company still gets over half its revenue from government contracts, which can be unpredictable.
They're also facing some intense competition from the biggest names in tech like Google and Amazon. And there's some concern that its growth could start to slow down in places like Europe.
So what do we do with all of this? We've got two powerful, completely opposite stories. On one side, you have this mind-blowing growth. On the other, you have a valuation that seems to defy gravity. How do we put it all together and see the big picture?
It really is like a two-sided coin. The bulls see a future AI giant, a company with unique tech that's worth the premium price. But the bears see a classic stock market bubble, pumped up by hype and just waiting to pop, like so many others before it. And what's so fascinating is that both sides have really good points, backed by actual data.
So, what about the professionals on Wall Street? What do they think? Well, it looks like they're caught right in the middle. The overwhelming consensus is hold. Only about a quarter of analysts are saying you should buy the stock at this price. A whopping 65% are basically saying, yeah, it's a fantastic company, but it's just too expensive to jump in right now.
And that leaves us all with the ultimate question. Do you bet on the revolutionary tech and the explosive growth, or do you listen to the warnings from history and that sky-high price tag? Is Palantir truly an AI titan of the future, or is it just history's next big pop? The answer to that is going to be one of the most interesting investment stories we'll see this decade.